Hello, everyone. You're watching me, Nikki, you also known as Facelesstrader, and we're gonna start. So the Fangmans are back. The Fangmans are your Facebooks, your Amazons. So let's discuss a few things today. Today's June 10, 2020. So this is what happened last night in the USA. As you could see, the Fangmans are back. The Facebooks, the Amazons, the Apples, Netflix, Google, Microsoft, AMD, Nvidia. The Fangman is back, and everyone else loses. Energy's down, airlines are down. All of the bankrupt companies are back downwards. You can see Facebook getting his mojo back. 3% all-time highs. Apple all-time highs, 3% up. Amazon all-time highs, all 3% up. Netflix 3% up. Google, there are a lot of sellers because of digital advertising, but still V-shape up. Microsoft all-time highs. AMD nearing all-time highs. Nvidia nearing all-time highs. Of course, your other COVID-proof names starting to go up as well. Shopify up, Roku up, Activision up, Take-Two up, Datadog all-time highs. So let's discuss what's happening. Okay, some news for you globally. Let's see. Let me try to preview to you. So what's happened yesterday was that Europe was falling down, and a lot of people were asking themselves, is the valuation for the Nasdaq too high to go higher? The answer was essentially answered by the market itself. The market's move on FANGs all-time highs while selling down all the airlines sinking is proof that we are heading to higher highs and higher lows. This is your Nasdaq. Let's go to Nasdaq. Your Nasdaq is now Nasdaq 10,000. So that is a very, very strong statement that we are ready to move higher ahead. So if your Nasdaq is now at all-time highs, of course, that's brought about of the big leaders. Meanwhile, you could see that last night, a lot of your airlines started crumbling down. Your American Airlines gets dropping moves, like from about 24, after, of course, a recovery from 10, rallies to 24. This is not sustainable, so we're going to go back down. You're going to see like companies like Airlines falling down, drops again. DAL, UAL, AAL, Expedia. So all of your airline sectors, so all the bad sectors are coming down again. You've got your, so quote unquote, your value names starting to fall again, which are your banks. So your banks are starting to fall again, 33. Will it become a higher low or will it retest these lows? That's yet for us to see. But we are seeing that this is a very bullish move, that the leaders are going all-time highs while your laggard sectors are going back down. So you could see that you're at resistance for Tapestry. So that's a sell-off move. Your resistance for PVH. Okay, so then again, even if they are hitting your resistances, the fact that they move this much in such a short time shows us that the market is already profit taking. Similarly, all of your bankrupt names are starting to go down. Take note that Chesapeake Energy is bankrupt company, went from about $8-9 to 75. Yesterday, it finally went down 70% down to about 25. So the market is already selling off all of your bad stocks. All of your bad stocks, like bankrupt companies like Hertz, it's falling back down. Your Luckin Coffee falls back down. So after like a brief rally, which was really a short covering move, it's all going down. Okay, all going down again. Maybe it goes to 3, maybe it goes to 2. We'll see. So we've seen like the bad names go down. Let's take a look whether all the bad names are definitively gonna go down low, like 40-50% lower, or is it are there names that we can pick up? So for the news, let's talk about your news. I think the charts of note that we have to discuss is Nordstrom. Nordstrom, ticker JWN. Okay. JWN looks to be like a recovery play. So take note that a lot of people thought that all of these department stores are going to go bankrupt the same way that happened with Neiman Marcus and JCPenney. So JCPenney truly became a penny. So the question is JWN Nordstrom a buying recommendation? And we think that at $16, it can move 100%, move to 32. First resistance at 25. These dips can be bought. So why? Thing is, why we think that way is that Nordstrom's is in the right track. Number one, e-commerce sales. Number two, they have closed down many stores. They have rationalized their cost. The bankruptcy of Neiman Marcus is actually good for them. They have $1.4 billion cash. Valuations are at the bargain level, anywhere from about 3 to 5 times PE, even if it drops 50% income or loses money. Essentially, the department stores today are functioning as e-commerce warehouses, and they're not going to be extinct soon. So the way to handle this is to be smart about your accumulation price and definitely allocate only 15% maximum portfolio size. Example, if you're trading a $10,000 account, $500 at 21 to 22, $500 at 18 to 19, and the last $500 at 16, or a maximum of $1,500 for a $10,000 size if you're trying to buy a bad name, which you think will recover on reopening efforts. So this is your Nordstrom. As you could see, a lot of bargain hunting is happening as it has fallen roughly about around 90% from its previous peaks. So we're not like hallucinating that it could actually go anywhere higher than $30. But as I said, this is more about risk and reward. If you can enter somewhere at about 15, 16, 18, that's good. You can sell 25, you can sell 30. That's a good risk reward for you, for a company that is trying to recover and having your e-commerce play. The other name that we're trying to look at is Macys. Okay, Macys, your next support is 7.4. So these are bad names, but the reason why we think that we could buy them is, of course, we got $4.5 in equity financing, which means that it will not go to zero. The fact that it will not go to zero is a good thing, because most of the companies in this sector usually go to zero. They file their chapter bankruptcy filing and so forth. So from hitting $80, we're now talking about $8. Of course, that's 9% down. It doesn't mean that it will not go down further, but your downside has your margin of safety. As you can see from the charts of Macys, there's a strong support. There's a higher low here. So your first support is somewhere here at about 7.5. Those who enter at 9 last night can enter again at 8 or 7. The reasons are the following. Number one, as you could see, struggling Macys has beat street estimates with their early first quarter numbers. They actually reported just a loss of $2 per share. Now, you might think, hey, it's still a loss. Why is a loss a good thing? Because Wall Street actually thought that they would lose $2.33. So better than expected losses is a good thing. The other thing is that the preliminary sales figure of Macys is $3 billion, and they beat the estimates. The company already has $4.5 billion cash in emergency funding, which would make it weather out through this COVID storm, even if sales aren't going well. Macys also showed a 45% year-on-year drop in sales, 17% spike in the debit, which is $4.5 billion, as the company has worked to survive the pandemic. Balance sheet shows that Macys is able to cut costs. Sales and general admin expenses are down by almost $500 million from the $2.1 billion it spent in the first quarter of 2019. These things matter because, number one, Macys is down a lot, like 40% year to date, 90% in the last 7 years, 8 years. The industry has a wave of bankruptcy filings, including, of course, JCPenney. So the next thing about Macys is the store should exceed the expectations. Seasonal merchandise maybe on December will help it exit their inventory. So we'll see. But this stock is a underdog that you could take a look. Macys is an underdog play from about 7. We think that you can sell it about 12, 13, 14, 15. So it's a double your money if you can enter somewhere about 7. The lower it is, the better your attractive downside is. So you get that good risk reward ratio for you. Next news is, of course, China's delisting rumors. Again, there's news that Trump wants to delist a lot of Chinese companies. And we saw that a lot of Chinese names were actually falling down. We've seen some Chinese names like Kuya fall down back to about 16. We see companies like Baozun, even after great earnings, fall down based on those news. So Trump is saying that they want to list Chinese companies from US exchanges, but there's actually a lawyer that's saying that it could actually hurt Wall Street. While the Chinese companies have traditionally preferred to list in the US due to the prestige, Fried said that Beijing is not particularly interested. So this that ongoing feud between China, it looks like Alibaba, after those announcements, actually Alibaba has told their investors not to get worried. You see here from a May 22 article, Alibaba executive tells investors do not worry about US delisting. They defended their accounting practices after its first profit drop since 2016. So the chief officer, financial officer Maggie Wu said that Alibaba's challenging quarter was still a rise of 22% for the first quarter of March. They still managed to have sales of about 114 billion yuan since a year earlier, still above market consensus. Their operating income fell 18%, but they feel that that 80% is just a one-time thing, as it was due to a net loss in investment income. During the company's earnings call, Alibaba proactively addressed the concerns of investors over the listing risk, heightened during the US Senate passage of a bill that would delist Chinese companies not accessible to Public Company Accounting Oversights Board after a period of 3 years. So they're saying that we are closely monitoring the development of this bill, la la la. So actually, Alibaba was not shaken out. A lot of these investors found comfort with Alibaba's executive saying that it's intact. So even after that news again, that ongoing resurfacing, Alibaba managed to defend its turf and higher lows. Nevertheless, if concerns on the listing will continue to transpire, any drops here at about 200 is vastly supported. These are all-time highs for your Chinese name, like Alibaba. You'll notice that some Chinese names never didn't really get bothered with those delisting. Of course, have already filed their regulatory filings for Hong Kong. So as you could see, no worries from investors. JD also no worries. So Chinese names, but still going higher as their business models are COVID proof. So I would say that there's still that risk for like Chinese names, but the sell-off is just happening for investor concerns that are scared of their smaller firms, whether it gets delisted. But I think that it's more of an opportunity, especially if the company is showing great earnings. In the case of Baozun, we think that any drops here to about 31.28. As you can see, it got two gap ups from about 28 to as high as 35 after great earnings. Baozun is the Shopify of China. It helps middlemans. It is a middleman helping like international brands such as Nike, Starbucks, essentially sell their stores, sell their goods online, even for like big companies like Estee Lauder. So we're talking about 231 international brands using Baozun. So it's really, really a Shopify for China. You want to enter names like these limited drops, 32 to 28 are good entries. We think that you have about 70% upside. You risk one, you lose one, you win 7. That's a kind of trade that you want to make. Okay, another good news. Netflix upgraded to $500. As you know, Netflix is a FAANG man. So these are your biggest blue chips in the world. There is an analyst who said that Netflix, after surveying, had actually a 68% penetration rate on the respondents, higher from about 65% in the last 4 quarters, showing that Netflix is widening its lead against Amazon's Prime Video, Disney's Hulu, and Disney's Plus. So definitely for those who believe that Netflix can capture a majority stake internationally, especially in India. India is a Netflix territory. They started 2016 and they want to grow from about 0 to 100 million subscribers. Netflix, as to date, even in the last 4 years, has managed to go from about 0 to 14 million. It went from 0 to 10,000 to 2 million to 14 million. So these are not some random numbers. You could see it in the quarters of Netflix. Netflix has 1.4 billion population in India to take over, and if they can just manage to get 10% penetration rate, that would be 100 million subscribers for Netflix, which is double their current subscriber count for Netflix, about 190 million. So definitely India is a great growth story for Netflix, and dips are really so limited. We're seeing that the current dip about 420 to 407 got massively eaten. So sky's high for the Netflix. For those shareholders, keep it running all the way to 500 and so forth. So good news for Netflix means good news for Roku, good news for a lot of your connected TV streams. Connected TV, you could see a lot of all-time highs going for it. The trade desk goes all-time highs. Roku actually reversed to the upside. Roku is here at about 112, 113. We are thinking that it goes back to about 140. Of course, Roku also partnered with Kroger, as we said in the news, so got lots of upside here. The risk is just $10. Your reward is $70. These are trades that you want to make for your portfolio. Another good news, of course, after Netflix, there's this news that okay, so we're looking at some bad names. So Funko is considered a bad name, but Funko had a partnership with Marvel. So what you want to do here is enter at higher lows as it goes all the way to 10. So you want to enter. So we've been entering here at about 4, anywhere here at 5. Those are your higher lows. If it touches anywhere to about 5 to 6, you want to enter these names. Again, take a look at your risk, take a look at your reward. If it fits that reward is bigger than risk, the proper thing to do is go in. Some names, as you could see last night, there was a lot of hoopla on a lot of your IPOs, Zoom Info. I think it's I don't think that the buyers today are really understanding if they like Zoom Info, but Zoom Info raised 100%, raised about $900 plus million at IB of 21. This is 100% already, actually at 50 divided by 21. That's more than 100% from IPO. Vroom also managed to get a 100% move last night. IPO was somewhere at about 24. They raised $500 million. It's an online used car salesman, car seller online. It is in competition with your Carvana. So yeah, Carvana, V-Shape. As you can see, these online firms are COVID-proof names. See the happening in the market. So while the strong names like FANGs are good, you have to be careful on your risk-reward ratios. Take a look more on good risk-reward bets. Bets that we're taking a look are I've been looking in some, what do you call this? I've been looking in some IPOs of like sports gambling. So esports entertainment, taking a look here at Gamble. Gamble looks to be an entry point here. IPO was somewhere at about $4. So 4 to 9, good pullback, enter somewhere here. GAN Limited also started in the market. Also sports betting. If you like the trends, Bets is one way to go. Bets is an ETF on your sports betting by Roundhill. So Bets owns, so it was just new. So if you like a specific name, you can go for Flutter, which is in London. All-time highs for this. Good job, right? So these are the trends that you want to have. So Flutter, of course, DraftKings is good, but it's quite expensive already. Went 400% up from IPO. So I'd like to enter lower prices. But if I can get any of DraftKings, I'd rather have Flutter, which owns FanDuel, Paddy Power. I'd rather own Gamble, GMBL. I'd rather own GAN. And because we like the gambling names, you can take a look in some casinos that are infrastructure plays. So although scientific games have a short-term pop from about 4 to 21, selling off here, any drops of scientific games we would continue to want to buy here at about 13, 14, and 16. So time's up. I'm ending my slides. I hope you learned a lot. Let's see the names that you want to enter. IPO, you might want to enter this given the flurry of IPO names. Progeny was an IPO last year. Good move here. Egg freezing, that is the business of Progeny. So looks like there's a strong support here at about 25 to 24. Gap up on the strength of the earnings. So you want to enter names like these. Of course, there are so many names. StoneCo, any drop should be bought. I want you to just basically focus on the leaders. Do not worry about like bankrupt companies or airline names. Those aren't supposed to be your forte. Take a look more on the leaders. Thank you guys. Bye-bye.